You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to choose from, including many great archive episodes of this fine program, Volatility Views. Where do you find all of that goodness in one place? Well, of course, the mothership, the flagship, theoptionsinsider.com. Where, of course, you can get the archives, you can get breaking news from the options market, you can get some unusual activity. We do a lot of that stuff over there these days. Our Tesla tracker, you can get breaking news, all kinds of fun stuff. And then, of course, when you want to dive into the audio, it's all there for you, right-hand side of the homepage, all the shows. Pick your poison, and you're off to the races. Good place to get the full archives, too. We like the iTunes and the Google Plays. We're up on all those as well, but sometimes those limit how many archived episodes you can have access to, most recent 50 or 100, and sometimes you like to go back a little bit. I understand, and so we got the full archives for you there on the site, as well as via our mobile app available for iOS, Android, and the ever-popular Fire OS. Of course, you can always hit us up. You hardcores, you volatility junkies can hit us up every Friday, noon Central, 1 p.m. Eastern. Listen live via Mixlr, Mixlr. So get out there and listen, see how the sausage is actually made. You can hit us up with some live questions, too, if you're feeling brave out there. And, of course, if you listen via the app, it's all baked in there as well. You can hit us up. Questions, comments, insights, pearls of wisdom, we welcome them all. Speaking of welcoming, let me welcome my cohorts onto the program now. Mr. Corner Office is on the corner of a plane right now. He's actually headed off to parts unknown, some other volatility hotspot of the world, probably some deep, dark forest in South America somewhere. So we'll find out where he was today next week. Meanwhile, though, let's beam in some of my cohorts, including the greasiest of meatballs, Mr. Mark Sebastian from Carmen Line Capital by way of OptionPit.com. Mr. Meatball, welcome back to Volatility Views. And where the heck are you today?
Good to see you. I am in downtown Chicago, walking back to the world headquarters of Option Pit on beautiful LaSalle Street, and I'm enjoying this great, cloudy, dreary Chicago weather. At least it's warm out, though, which is nice.
Yeah, cloudy and dreary, but 80 something pushing 90, who knows? So yeah, can't complain. I guess unless you're into the cold, then of course you can't complain. And also joining us, doing an able fill-in, going to do his best Mr. Rhodes impersonation today, is an old friend of the program. Hasn't been on in a little while, so we get to catch up with him and see all things mullet and kicking the can and everything else. Guess I'm talking about Mike Thompson from Typhon Capital Management. Mike, welcome back to Volatility Views to you as well.
Hey, thanks for having me, Mark and Mark.
And so, do you have your Russell pants on? You ready to do your best Russell impersonation?
Yeah, I have some Russell pants and his signature purple frame glasses.
There you go. There you go. All you're missing is an orange Oklahoma sweatshirt, and you're good to go. All right, with the team assembled, let's get to it. Let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Always like rocking out to that little tune there. Welcome to the Volatility Review, the portion of the show where we dive into the week that was, and in this case, in all cases pretty much, still is. We are, like I said, streaming this live and recording it Friday, the 16th of June, right around noon Central, 1 p.m. Eastern, so right smack dab in the middle of the trading session. And it's another weird one. It's kind of been a weird week, really, to use. There's no real other term really you can use to describe it. It's been all kinds of interesting indices kind of moving to the beat of their own drummer. Been kind of a bit of a sluggish, laggard week for the S&P and the Dow. They kind of haven't really moved. They've been off a little bit, but nowhere near as much as the tech-heavy Nasdaq, which is kind of been on its own little, I wouldn't say death spiral, but own little, shall we say, own sell-off period here. I mean, if you remember listening last week, listeners, right as we were getting into the crystal ball last week, right towards the end, all of a sudden we started noting something weird was going on, particularly in the Nasdaq area where things started selling off pretty aggressively. And that kind of continued into this week where we saw Nasdaq kind of moving to the beat of its own drummer, extending the sell-offs of all the other indices, doubling, tripling them in some cases. So interesting. And we're seeing a little bit of that playing out again today. The S&P kind of unched on the day, Dow up slightly, pretty much unched on the day as well, and then Nasdaq off about a third of a percentage point. So again, tripling the losses of the other major indices, percentage-wise at least. So interesting stuff. And of course, even with all this kind of what the heck's going on out there, we're seeing VIX Cash exhaling a little bit, off about a quarter of a handle, hovering right and firmly in the mid 10 handle range, right around 1060 odd or so right now. So interesting stuff. A lot of things to unpack this week. Mike, since you're our guest, we'll give you pride of place. What's been catching your eye in this, shall we say, weird volatility week?
Yeah, I think the name or the theme of the week is rotation. I think you're seeing money rotating out of the tech, the FANG type names, and into other S&P sectors, and that keeps this sort of bifurcated market action going. And, you see the VXN or the Nasdaq Vol Index much higher than the VIX S&P Vol Index. So I think the name or the theme of the week is rotation as opposed to liquidation.
Wow, got some trucks pulling up in the background there. But, speaking of rotation, I know you're primarily VIX Futures, and we'll get to that in a little bit, of course, when we start breaking down all things, main mothership VIX, which is, of course, S&P 500. But, there's been a lot of action out there in NASDAQ. We don't really talk a lot of VXN. If you're not familiar, listeners, this is, of course, the NASDAQ Volatility Index. And while everything else has kind of been ticking off, NASDAQ, as VXN in particular, has kind of had an interesting week this week, gapping up, as you might imagine, last week during the show, gapping up from about 13 to actually hitting about 18 and a half last week, and kind of floating around up, hitting as high as 21 at the beginning of this week, then kind of trending a little bit lower and ending up the week right now right around in the 16.5 range. So it's been a markedly different story from a NASDAQ volatility perspective as it has been for the old mothership VIX. Now, I know it's a different story, too, from a tradable product perspective. You don't really have the in-depth universe of deep liquid products over there on the NASDAQ vol side that you do on the VIX side. But I'm sure you guys in your various kicking the can and mullet models probably at least pay attention to VXN. What's your thoughts on what's cooking out there from a Nasdaq vol perspective this week?
Yeah, we look at it like it's definitely an interesting observation for us. And does it spill over to, S&P vol is kind of our number one question out there right now. And, at these levels where the VIX Cash is and where VIX Futures are, a spillover to S&P vol, could equate kind of a meaningful move on the upside, even if it's temporary. So that's kind of the number one question. The, VXN to VIX ratio, really blew out last week during your guys' show, and it stayed pretty elevated. So to us, it's definitely an interesting kind of, we're taking it as a warning shot across the bow, if you will.
So I know you have a lot of creatively named strategies for when the VIX term structure is in one place. You have the mullet when it's another way, it's kick the can. Do you have a creatively named strategy for when that VIX to VXN ratio gets a little out of whack? You maybe call it the tech mullet or something like that?
Yeah, the position we have on right now in VIX Futures is we call it Tellum, which is the reverse mullet. So it's just mullet spelled backwards.
I do love that. So you have nothing for when the Nasdaq gets wonky. No VIX to VXN, crazy, funky ratio type of strategy, anything like that.
No, we haven't come up with a name for that environment yet, but I'm sure we will. But to express sort of that potential for a vol move up, we have the Tellum on right now. So we're long the front, short the back in a ratio right now, and just kind of sitting with that position.
Well, that's been working out recently, as always. We've seen. We'll talk to you a little bit later about that VIX term structure, how it's playing out there. But first, all that typing means the meatball is back in the office. Mr. Meatball, what is catching your eye this week? And if you want to weigh in as well, not just on VIX, but as that we saw last week, kind of kicking it off on the show with that bizarre seemingly disassociation between NASDAQ and VIX, or NASDAQ and S&P, and of course VIX and VXN, and it kind of continued this week. So if you got any thoughts on that, as well as what caught your eye this week from a vol perspective, have at it, sir.
There is all sorts of nutty things going on. So I think the big piece is, you've got the VIX at 1090, you've got the VXN at 16.64. NASDAQ falls above Russell vol right now. The RVX is 15. How often do we see that? That is a rarity. And I think that shows you kind of what is really going on in the NASDAQ. It is just nutty. Then today we have this crazy Whole Foods deal, and it is like a merger arbitrager's dream today. There's been so many pennies and dollars to pick up around this cash deal. So I have to say that I'm kind of shocked that we have not found a floor yet in the Qs and in the Nasdaq. Although with things starting to slow down a little bit, I'm looking at kind of put spreads and NDX and some things like that. So that's what I'm looking at. The Apple's been terrible. Apple's lost $13, so almost 10% of its market cap. So Apple is down, almost $100 billion in the last week.
It's funny. I was kind of keeping an internal clock on how long it would take us to, even on this show, which is not really our purview, but it's kind of so ridiculous, it's unavoidable, how long it would take us to get to that Amazon Whole Foods deal. Took us a whole whopping 15 minutes or so. But yeah, excuse me, that is just, talk about out of left field. We know that Amazon's been slowly expanding their footprint in the brick and mortar grocery side of the business, which has proven to be at least somewhat insulated to the woes of retail here. But I don't think anyone in their right mind expected them to really dive whole hog. It's been, almost $14 billion to pick up, or perhaps more. I forgot the exact number. I know it was about a 20% premium to their closing price in Whole Foods stock to pick up this thing. And now all of a sudden they're firmly in the brick and mortar grocery game with all the attendant costs and issues therein. So congratulations, I guess. The market seems to like this, which is kind of weird. Amazon up nearly 3%, and pretty much every other grocery name on the planet just getting annihilated. Costco, Kroger's, all these big chains off ridiculously. So you're right, Mark. There's a lot of merger arb to be had here today, because who would have thunk? How often do you see the acquiring firm just in any deal rallying, let alone this aggressively? They're up about 28 handles right now. This is just all sorts of words. So now if you're paying attention, listeners, Amazon's got a couple of stakes in some old business models. They got the Washington Post, so they got some old dead print media, and now they got, it might be Bezos himself, though, I'm not sure. And then, of course, now they have grocery chains. So there you go. If you're, I think buggy whips are coming up next. I know it's kind of outside of our purview, but really quickly, Mike, you got any thoughts on this just absolutely wacko deal announced today? This has shades to me of all sorts of HP Compaq and other sorts of fun stuff going on. Does it at least come on your radar? I know you don't sling any single names, but maybe that maybe you have a new strategy for this one now, the Amazon Whole Foods strategy.
Yeah, well, the whole thing started because Bezos tried to order something from Whole Foods through Alexa, and she thought that he meant to buy the whole company.
Oh, that's funny.
I like that. That's actually pretty good. Who thought you had jokes on the Typhon Volatility desk? Look at you.
And this story is not over. There's a lot to it, and I know Mike's going to get into it here, but this is a much bigger story and a much more interesting trade than just a simple cash deal.
Yeah, I think Wells Fargo's already out with a note saying that they think there's going to be other bidders. If you look at what this potential deal is doing to the combined market cap loss of Costco, Walmart, and Target. You net all this together, and it's a net loss of market cap in the S&P 500 today. So Amazon is up 3%, but that's only up a portion of the market cap being lost in the other brick and mortar retailers. I think so. From a volatility standpoint, you have to look at what those S&P component individual vols are doing over the day. It's going to flow through to the index vol. So it is creative destruction of vol decrease, a vol lowering event, or an increase in vol. And as the index is constructed, I would think this be a net, increase to S&P vol.
Yeah, Whole Foods is trading 50 cents above deal price right now. So I don't think anybody expects this thing to go through at the deal price. I look and Walmart's a really interesting potential bidder. I don't think anybody's going to let Amazon have it for this cheap. Let's put it that way. I think if Bezos wants it, they're going to make him pay. Because let's not forget, Whole Foods 2 years ago was a little over 2 years ago was an $80 stock. So this company used to be worth almost $30 billion. And they're getting bought for 14. So it's not like this company wasn't struggling. I don't know that they're as direct a competitor of Costco as maybe the market's interpreting it. I think there's a play to go long Costco. And Walmart and Whole Foods have a very different clientele. And so this is an interesting trade, but I'm not sure if I buy into all this wealth destruction among the major retailers with Whole Foods market. I guess the ones I would worry about are maybe like a Kroger or that has some issues in that, there might be a little more direct pain, but I don't understand quite the 6% drop in Costco. I don't buy into it, and I think that there's some opportunity there. And like I said, Whole Foods is trading, if you include interest, 80 cents above deal price, so 2% higher. I would be less than shocked if this thing doesn't get taken out for 46, 47, 48 bucks a share when all is said and done.
Crazy, because they put a nice premium on it already. I think it was a 20% premium to the closing price, and yet not enough. The market saying they want more. I'm with you there on the Costco thing. That struck me as odd to see them getting crushed as aggressively as they did. I think they're off about 7.5% at one point. Right now they're still getting hurt pretty good. Let's see if I can get the actual last quote. There we go. That'd be better. They're off about 5.5% right now. I'm kind of with you there. I don't see the direct comparison as much as I do to Kroger. But that said, we'll probably get into this kind of deal more next week on some of our other shows like Option Block and stuff. It's happened this morning. It's the big talk of the town. We Got to kind of flit it in there to the show. Let's move on to the mothership, the VIX Cash, like we said, off again this week after kind of spiking earlier in the week after having some events that actually could have led to some vol this week. We, of course, had the Fed. We had more, I think what you call them, Trump tantrums yesterday on the Option Block show. So there was some things out there to drive some vol, and yet it didn't, like we said many times, it didn't really end up materializing in a lot of net vol. Like I said, VIX Cash still south of the 11 handle right now. I do want to bring your attention to, a lot of you guys are hitting us up with this question. I thought we'd get into this before we get into the rest of the data out there on VIX. The big article out of the Journal this week. Journal seems to love really sinking their teeth into VIX these days and talking about it a lot. Some articles better than others. A lot of people are asking us what we thought of this article, so I thought we'd bring it up now. This is, what do they call this one? Oh, the snowballing power of VIX. As they called it there this week, where they kind of detailed, a few month or two ago, I believe it was them that had the article about the volatility feedback loop, and now they're coming into it. They had a couple of one. I know they had one recently that the CBOE heavily disputed about the death of retail options flow and that sort of thing. This one now, a little interesting. They're kind of talking about the legion of funds out there that have kind of linked themselves to the VIX and using it, whether it's on an insurance perspective, insurance funds or others, using it as some sort of critical target to indicate when VIX hits a certain level, they need to start doing something, buying or selling. You got mutual funds out there, annuities and others that are trying to guarantee retirement income being linked to the VIX. And kind of this all kind of going back again at the end of the day to that argument of the volatility feedback loop. Excuse me. I think one quote in here from a financial advisor they talked to. Interesting group of people they talked to for this article, too. Some random retail guy out of Florida who says he made 50 grand short in VIX, which, okay, you have to take those anyone's claims of profits with a grain of salt, but that's interesting. Then you have a financial advisor out of New Hampshire who says when the VIX finally pops, you're going to see the mushroom cloud from Saturn of all these people who are short VIX and all these funds who are linked to VIX who are short it just blowing up. That's kind of going back to that old talk about with the volatility feedback loop. They mentioned Mark Cuban coming in the early days of VIX, and that was, at least according to them, the genesis of creating the tradable VIX future, because they tried to sell him on a variance swap at Goldman. He wasn't buying it to hedge his positions. So all sorts of interesting things. Of course, Cuban has a storied history of hedging back in his old days, his Yahoo shares, which ended up is the reason why he's still wealthy, because we all know what happened to Yahoo stock in the 2000s. So a lot of interesting stuff to unpack here. Maybe Mike, will start with you, because obviously you're knee deep in the weeds on this one. You trade every day in that expanding universe of VIX and related products and funds, and you also talk to a lot of these different funds out there. Do you think this quote unquote snowball effect is as prominent as the Journal is saying, and are you as worried as the Journal appears to be of when it ends, it's going to end violently and horribly for all involved?
That's always possible. But I think that the snowball aspect, I think it's just a recognition that the space overall, tradable volatility and the recognition of it as an asset class has risen just with people getting more familiar with it. I think part of it started as a function of low interest rates and looking at volatility selling as an additional source of return, given the unattractiveness of where rates were and are. So I think, it's not like it's a bolt out of the blue that the volatility space is more popular now. It's just a natural function of recognition and growth and, more AUM dedicated to the space. The big short interest out there, whether you look at VXX or VIX Futures open interest, I don't think that type of positioning in and of itself, is indicative of a potential ginormous short squeeze, because there's more to the ecosystem than just those contracts. Everything rides back of S&P options, which is a far larger market than the tradable direct VIX products. So I don't see, you don't know if there's other sides to the book of business than if you're short VIX futures and you're short, say, S&P futures. Yeah, you're short VIX futures will show up in the commitment of traders report, but it's not necessarily indicative of the net position of a short vol trader or a book of business that's short vol. So I think it's, one data point. It's missing, probably missing the whole ecosystem.
Mark, same question for you. What are your thoughts here on the endless concern over the snowballing power of VIX? And do you think it's going to explode and we'll see it from Saturn when eventually it does happen?
No, there's definitely, I think if you look at what happened with the Trumper tantrum a couple of weeks back, by the end of the day, when the VIX got to 15, everybody that had been out was out. That needed to get out was out. Can people needing to cover push VIX a point or two? Yes. Could it push it to 30 or 40? Absolutely not. For every short, there's a long. It's not like it's not like everybody in the world is short and nobody's long. There has to be another side. So I completely disagree with the idea that all this short interest could cause a major catastrophe. You look at our friend 50 Cent, right? We had that huge, the big story, 50 Cent makes blah, blah, blah million on Trump, blah, blah, blah. Didn't sell a stinking option. Why? Because that was hedging something else that he was probably getting beat on. So the idea that all of this is going to create some sort of doomsday VIX is, I think, an interesting story, but also unlikely.
Yeah, that was a good data point. We talked about that on the show, obviously, a few weeks ago. Everyone was, including, I think, the Journal and Barron's, everyone else who was obsessed with 50 Cent, talking about how he had this great payday, I believe, as they termed it. But we looked into it, and you're right. He wasn't closing out anything, which is usually a good sign that perhaps something else is afoot out there in the marketplace, which is usually the case pretty much 9 times out of 10 when you're talking about most volatility positions. Very rarely is someone coming in and just picking up a bunch of upside or shorting a bunch of upside and not having anything else against it. So always bear that in mind when you're talking about this one out here. But still, interesting stuff here as this story continues to permeate all the way out there into the ecosystem. Moving on to some other things that are lighting it up out there this week. Of course, the Skew Index actually getting a little more elevated compared to where it was about a week or two ago. 2 weeks ago, it was hovering right around 124, 125, which is right around normal for that. About a week ago, it was about 127, getting to the high 120s. Nothing that interesting. And then this week is up to about 134 or so. So starting to get a little bit more juice in there. Perhaps people starting to pile into some puts. But then again, as we've said many times, there's a lot of moving parts in there. You really need a tool that breaks down not just the skew net, but what's going on in the call wing and the put wing. That's why we like talking about it on our Typhon show coming up in about 1:30, because we have that tool. It's called Quick Skew, and it shows you what's happening in the call wing and the put wing. And we can break it down a lot more easily using that. But still something to note, a lot of you guys who like to use that in your indicators out there. It's worth noting. It's starting to creep up a little bit. Maybe a worthwhile flag to investigate going forward. Speaking of things to investigate, we got Mike on, so we know these guys live and breathe, eat, sleep, and just dream about, I'm sure, all things VIX Futures. And it's interesting to see, as we have seen, the VIX Cash, not so much right now. Actually, it's kind of unched right now, so it is kind of coming back a little bit. But this kind of a little bit of resurgence in VIX Cash this week has kind of smoothed out the front portion of the curve. We were saying, last week or so when VIX was flirting with, record lows around 937, that level of steepness, that curve, that slope between the cash and the front and second month, which is getting ridiculous because there's only a certain point you can really crush the futures down to until they say this far and no farther, and the VIX Cash can kind of just do its own thing. So it was getting a little bit disassociated. Now it's coming back, so not quite as steep. Right around a half a point, 0.6 of a point between the front month and the cash, and about 1.5 points or so out there, but 2 months out in the future. So interesting stuff. Mike, you said you have the Tellums on right now, which is, I believe, selling the back, buying the front. I got a feeling over the last week that's worked out pretty well. Tell us why you're doing that, and what you're making of this kind of these extremes we've seen in the VIX Futures term structure of late. We didn't have you on a couple of weeks ago when things were getting really wonky. Walk us through a little bit too, your thoughts on that and these kind of bizarre scenarios that are a little bit counterintuitive, I think, for a lot of our listeners to think that when VIX Cash starts getting really cheap, that there'd be so much slope to that front portion of the term structure, but that's kind of how it breaks down. Walk us through what you guys like to do in those kind of scenarios as well, and why you think those setups really happen. Why don't the futures chase the cash even more?
Yeah, I think you're right. The steepness when the cash was printing kind of mid to low nines is a reflection of the futures market believing that VIX Cash low number is basically transitory. It's not going to stick. It's sort of around for that day or that little cluster of days. But a 9.5 cash VIX, essentially everything has to go perfectly correct and very little can go wrong with news flow, price action, et cetera, to have that level make it all the way to expiration. And I think that's what you've seen. You've seen a little bit of net curve flattening this week. I think that the kind of Nasdaq air pocket probably, put some people on notice or on guard that those types of liquidity vacuum sell-offs can happen kind of out of nowhere. The Goldman note talking about valuation is, that was not a surprise that FANG was, highly valued, but just that seemingly innocuous type of news flow can cause quite a big sell-off if there is that liquidity vacuum. So, generally steep curve. We love to sell steep curves. Steep curve with cash in the single digits. The futures just don't buy that. That's going to maintain itself until expiration. So the Tellum position being short the front or long the front and short the back, we have it set up as a ratio. That's just looking for either a flattening on the curve like we've seen this week, so it's been mildly profitable, or it benefits from an event or a spike or, a vol swell, maybe a point or two type of swell.
And at what point, we're starting to see the cash kind of come back in line. At what point do you flip that or take that off, or do you go mullet style or maybe back to cash? Where's that inflection point for you guys?
Yeah, I think if we don't see kind of continuous flattening in the curve when we had that position on, we'll probably look to change up the position post June future going off the board. So basically, we'll take a wait and see approach with the ratio. It kind of pays for the carry if nothing happens, and we're operating mostly in months 1 through 3 right now. So we'll have to roll out after June goes off the board, but it's kind of a time-based approach. And if we don't see the price action we like, a flattening of the curve, right, that doesn't continue, that's when we make the decision to turn it around.
And Mark, I know you don't watch it maybe perhaps as closely as the Typhon boys do, because that's pretty much what they trade. But any thoughts on kind of the interesting maneuvers we're seeing out there in the VIX Futures this week, and a little bit of the undoing of that kind of ridiculous slope we saw over the past couple of weeks? Yeah,
one of the things that we talk about a lot is usually the futures are right and the cash is wrong, and that proved itself to be right again. The VIX Cash is still cheap, but the futures have not had to move very much. They're still sitting there around the June future that expires Wednesday, still sitting around 1140, and it has not had to move. So it's been interesting. I think the one piece that is a little odd is that July to me seems like July
truck's backing up again.
Yeah, July seems a little cheap in my book. I think maybe they're getting ahead of themselves with the July 4th weekend, but July looks a little overdone. So does August, which is traditionally an ugly month. So that's about the most interesting piece that I've seen.
Speaking of interesting, Mark, we're going to see how good of a Russell impersonation you can do, because he's off on assignment. That means you get the joy of doing Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
I love it. You can't have a week go by where we don't have that drop in the show. That said, Mr. Meatballs is usually the portion of the show where I allocate 20 to 30 minutes to Russell for him to really do an in-depth, a deep dive into all things VIX weekly options. Let's see if you can handle 5. Think you can handle that?
I've got a couple of trades that look very interesting that went up in the weekly options today.
Go for it, sir.
All right. So most of the activity is in the June 28th. So they expire on June 28th. This is a biggie. We had a buyer of the June 28th, 21 calls. All right. He bought, so far on the day, over 23,000 of these have traded. And these are 10-cent options. They've traded up to 12 cents. We saw 13,011 and another 4,731 trade 12 cents earlier today. So this is just what's happened today. In terms of other areas where there's some high open interest, we've got pretty high open interest on the June 28th 30 calls that happened last week when somebody on the 2nd when somebody bought 10,000 of those. And we have some decent open interest on those 19 and 20s as well. On on the 14th, 9,900 of the June 28th 19 calls traded. Looks like they traded 15 cents. And on the June 28 20 calls, the 19s were on Wednesday. On Thursday, we saw 6,000 of the June 28 20 calls go up, and what appears to be about 10 cents. Previous day, a couple thousand had also traded for 10 cents. So lots of baby upside call buying for the June 28 contract. Not sure why, but that is where all the volume is.
Yeah, I'm looking at that right now. Well done there, sir. Not a bad Russell impersonation. All you need is the orange and maybe a little bit more of a drone to your voice, and you're good to go. But yeah, I'm looking right now. 23,661 of these bad boys haven't gone up so far today. Maybe more in store for us. These are the 21 calls in VIX, listeners, expiring next week, the 28th. Actually, in a couple weeks from now. About a week and a half. So yeah, interesting stuff. Someone looking or concerned about, shall we say, a pretty aggressive upside move in VIX over the course of the next week or two and putting his money where his mouth is. Granted, these aren't super expensive. These are a dime, but still, that's a dime 23,000 times. So that'll leave a mark. So obviously you got something big cooking if you're going up. That's almost 10% of the volume gone up so far today in VIX. So that's kind of just shows how much the weeklies out here are evolving and what a big portion they are as well. I'm looking right now, also 10,000. Again, these are the monthlies. It gets a little bit askew when the monthly becomes the weekly because then people are kind of trading in and out and closing positions. So I kind of take the action in the monthlies, even though it technically is a weekly with a little bit of a grain of salt. But 10,000 of the 20s going up today as well. So a lot of interesting stuff afoot out there in the weekly VIX options. You know, Mike, you guys, obviously you're analyzing the VIX futures. We've seen more evolution of short duration products in the weekly VIX and the short duration VIX futures as well. I'm sure you guys also watch a lot of these, the weekly VIX options activity as how it may inform your trading going on. So what are your thoughts on some of this activity we're seeing out there, and how has this evolution, this increasing ecosystem of short duration products, how is that affecting your models, if at all, out there, your Mullets and your Tellums and your various other strategies?
Sure. Yeah, I think it provides a sort of even further, more granular picture of the curve. Obviously, there's weekly VIX futures out there, so it gives you a more informed look at the term structure of the curve, and you can see, event bubbles or dents, some seasonal dents. I would expect, a lower weekly VIX future around the 4th of July holiday, for instance. So, it's incorporated into what we look at it on the model. We include the VXST index in what we do. And I think the VIX weekly products are probably, a year or two behind the runaway success of kind of the S&P option weekly products. I think the S&P weekly stuff has spread volume across far more expirations, and you've seen that kind of smooth out the volatility term structure in the options. I think you'll continue to see that in the VIX weekly products, and it just gives us a more granular look at the curve, and there'd be different spots to pick, different relationships to trade.
So you like it. It gives you a little bit more data points to watch, and like you said, a little bit more granularity when you're slinging these things, as opposed to back a few years ago when you kind of only had the monthlies and that was the only game in town. So it's fair to say you like this evolution of the space?
Yeah, absolutely. I think it'll continue to head that way as you mentioned, the shorter duration stuff. Generally, you're paying less premium for options because you're just paying less time value, and I think more and more models will incorporate that. Sort of just in time or very targeted, specific expiration date to do their business, whether it's hedging or speculating.
Well, let's get into some of the actual VIX options activity that we saw this week. Like we mentioned, the weekly is taking up a bigger and bigger portion of that share. I think someday in the near future we will see. I mean, we have the Junes on here right now. Again, I technically kind of dismiss those as weekly. So the Junes are dominating the top 10 for this week. But that said, there will be a portion, I think, sometime soon we will see. If someone keeps gobbling up like 21,000 today, they do that for the better part of a week, we could easily see a weekly breaking into the top 10. That said, let's get into it. The top 10 hot VIX strikes, massive mega positions for this week. And number one and number two with the bullets still this week, as they have been for the past few weeks, are the June 30s with 339, about 340,000 contracts on the 30s and 302,000 on the 35s. Those two seem kind of unbreakable with their lock on the number one and number two spot, respectively. Nothing else is really challenging them. We got to drop down another 50,000 contracts or so just to make the number three spot, which are the June 15s with 255,000, so just over 250,000 open there. Right around a similar number, 247 for the June 19s, taking the number four spot. Number five, 225,000 of the June 20s. It's kind of a nice little June call strip here. Number six, 208,000 of the June 16s. Number seven, the July, first and only July sneaking in to the list here. The July 20 calls, 194,000 of those bad boys. Number 8, the June 20s, 190,000. Number 9, the June 17s, 188. And number 10, all the way at the bottom, we find our first and only puts on the list. The June 11 half puts, Mr. Sebastian's favorite strike out there, with 187,000 of those bad boys on the list. Total of about a little over 10 million contracts open right now out in VIX land. So pretty decent open interest, about 7.8 and change on the calls and a little over 2.25 on the puts or so. So a lot of action out there. Good thing Mr. Rhodes is not here, because it's getting a little into his nervous zone right now. VIX call the put is about 3.5 to 1. As Mr. Rhodes said, he gets a little nervous when things get above 3. So wherever he is right now on his plane heading to Indochina, wherever the heck he's going, he's probably feeling just his ears burning and getting a little bit nervous, and he doesn't know why. It's because VIX call to put is slowly, inexorably creeping north. ADV right around 713,000 contracts right now. And today, like I said, so far today, kind of light out there in the mothership, about 270,000 contracts lighting it up. Nearly 10% being those weekly calls we just talked about, 24,000 of those bad boys going up. Yesterday, pretty light too, under 400,000. Wednesday and Monday, the big days of the week, 658,000 on Wednesday and 780,000 on Monday. So interesting stuff lighting it up out there. Mr. Sebastian, you did a good job on the weeklies. Anything catching your eye in the big VIX mothership this week before we move on to some other interesting topics out there and let the readers have at us?
Yeah, we just saw a 35,000 of the August doubles bought for a nickel today. That's a little bit unique. And that's
doubles, really? Okay, I gotta pull that up while you're talking. Go ahead.
And then, there's been a ton of interest in June downside on these pops. So I've seen pretty consistently when the VIX gets above 11, we've seen a lot of guys step in, and by the 11s and the 11.5 puts, those have gone up pretty aggressively. And we've also seen just kind of general action on the June 12s and 13s, starting to see a few 1x2s go up again, although not nearly as much. With this pop in VIX, we've seen a big increase in put holdings, which is always interesting to me.
Oh, those AUG doubles, I'm looking at those right now. Those are lovely. Those are beautiful. That's like a February trade. Usually you see that going up in like February. That's what I always say. Yeah. The crazies are out and they're buying like the 70s.
It's allegedly a seller. The AUG doubles, they got 0.059. So they sold 10,000 at 8 and 25,000 at a nickel. So it's allegedly a seller.
Really?
Although I don't know if I believe that. I think it might be a buyer. That's my guess.
You might have to put your feelers out to some of your folks out there. That was color from Henry. Henry's in the chat room. Maybe he'll fire off with what he thinks that actually is. But that's a good one. I want to dig into that one a little more. That's like I said, that's a February trade. When I say that, listeners, for a long time on this show, we saw, for some reason, we never understood it. All the crazies would come out in February for VIX, and they would do the crazy stuff like buying VIX Feb 70s when the VIX Cash was 12 and things like that. And that would always happen in February, and we never knew why. Apparently, perhaps the new February. While we get some more color on that trade, let's keep on rolling. Let's get some of you guys in on the game. It's time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to yes, you're right. I'm looking at these. I'm looking at actually using Henry's system to give him a shameless plug over there at Trade Alert, and yeah, we're at 0.059. That's a price. That's a print for 35,000 of those AUG 55 calls. Interesting stuff, listeners. Tell us what you think about those. Why would you buy and or sell those AUG doubles, and what do you really need to have happen in the world to make those pay off? Interesting stuff. Let's get up now here to what you guys have been up to. We like to ask you guys questions in a segment as well. We asked you guys last week, hey, with VIX, at least when we wrote that last week, when VIX flirting at record lows, VIX seemed like it was giving up the ghost. We said, where are you guys looking for some new sources of vol? Gave you 4 choices: crude, metals, FX, and individual equities. And you guys ran away with crude. About a third of you choosing crude, but it was pretty equal across the board. 27% going with the individual equities route, so your Teslas and Amazons and whatnot. And then a tie for 20% between FX and metals. So interesting stuff. See how you guys stack up. This week we asked you guys, hey, last couple months ago, actually, I think we asked you, what would be the low in VIX? Over 40% of you said VIX wouldn't break 9 for the rest of the year, 2017. But we, given the fact that we were flirting with that level last week, we thought we'd ask you again. Maybe you changed your mind. Recent events have us asking once more into the VIX limbo trough. How low will VIX get in 2017? We gave you 4 choices. Will it still not break the 9 handle, or will it not dip below 8.5? Will it not dip below 8, or is it look out below open season on the downside? We're going to see a 7 handle in 2017. Mike, you're our guest. Perhaps we'll start with you. What is your vote on that poll as the man who watches all things VIX Futures? And then what do you think is winning our poll? What do you think our audience is voting for?
Let's see. I'll start. My vote would be it doesn't break a 9 handle on cash. And I would say what's winning your poll is, in the 8s.
So it won't break the 8 handle. That's what you think is winning? Okay. Interesting stuff. Mr. Meatball, you kind of weighed in yesterday on the option block, but you have a chance to revise your opinion if you think. What are you feeling, and what do you think is winning?
Well, I forget. What did I get to be above 8.5?
You said above 8.5 yesterday, yeah.
Yeah, I still am there. I think we could intraday dip below 9. I don't think we ever settle there. But I am. I'm thinking that this is the lows, or the lows are already in, is probably winning.
There we go. Yeah. So I was looking here. People are chiming in on a bunch of things we were talking about here. Well, let me give you the results here before I get to those. I was getting distracted by all of people's live comments. I don't know what that truck is that keeps going off in the background. I think the Thompson boys are launching trades, and that's their trade trigger there. But yeah, so far this week we got about a little less than a day left. 66% of you, 2/3, having short-term memory, saying it won't break 9. 66%, 17% on the other side, the extreme other tip, saying look out below. We're going to see a 7 handle this year. 10% saying 8, 7% on the Sebastian and Thompson tip there. So interesting stuff. If you haven't voted yet, get out there. You got another less than a day or so to make your voices heard. Like a bunch of other friends, we got some good comments coming in. Let's see how many we could get to. We were talking before, Mark, about someone picking up those 21 calls on the weeklies, doing it expires in 12 days, doing it 23,000 times for a dime. We got the Beers Advocates. I guess we know which way he leans in the market. He says, it sounds like a reasonable bet. What are the odds? 1 to 100. If the VIX would spike to 21, it could also spike to 30. So there you go. Someone saying that's a reasonable trade, buying those calls for a dime 12 days out. I'm not sure if maybe he's being tongue in cheek here. It's kind of hard to interpret some sarcasm on Twitter, but that said, interesting stuff. Another comment here we got. This comes from what we were talking about last week. I'd be curious to get your thoughts on this as well, Mike, because you weren't on the show last week. This comes in from Angelo, referring to those kind of conflicting viewpoints, conflicting research, conflicting ideas coming out of Goldman and Barclays last week. Goldman, CIO, talking up the fact that VIX Cash probably should be a lot higher. A 10 handle doesn't make sense, giving all of the known and unknown unknowns lurking around, I should say, out there in the ether. And then Barclays coming out saying, actually, VIX cash could be a lot lower. A lot of the current juice is coming from the premium, some of the convexity coming out of the put wing. And if that should come in, we could see VIX handle really drop into the 8s and perhaps even to the 7s. Angelo saying, that point from Barclays about the convexity of SPX puts is somewhat meaningless. As long as market stays lofty, the bid for those puts will remain. I don't foresee a scenario where the market remains elevated, but the bid mysteriously disappears for SPX out of the money puts. So the VIX can't realistically break into the 7 or 8 handle. I did like the stat about the VIX prints through 1960, though. I'm kind of with you on that, Angelo. I like what you're saying. You're right. It is kind of, I think I even mentioned this on the show last week, it's kind of difficult to foresee a scenario like Barclays talked about where we remain here, and because you have to remain here, obviously, for VIX to stay lower, but somehow the bid for those puts just magically goes away. Everyone all of a sudden is content with these valuation levels. So I don't see those two things happening. Obviously, if we start dropping in the underlying, VIX is going to start ratcheting up anyway, so there goes the 7 or 8 handle. So it is kind of hard to foresee a scenario that allows that, unless, of course, we do keep rallying. But then, of course, if that happens, we might see the bid for those puts actually increase. So it's an interesting scenario. I don't know, Mike, I'd like to get your thoughts on that in general. Barclays was talking last week, some research about it was kind of all the juice in the SPX puts. I was keeping VIX cash as high, quote unquote, as it is. And without that bid, it could actually be a lot lower. So I'm curious your thoughts on that. And then what our friend here, Angelo, has to say. He thinks that's kind of a meaningless comparison because that's not a scenario that could really realistically happen anytime soon.
Yeah, I mean, I think there's always a bid for those, little small delta puts because, it's kind of a substitution for your traditional kind of 30 delta buyer. They'll go buy those little 5 to 7 delta type of puts. And it really, how further can the bids collapse in those teeny options out there? They have to go from like nickel 10 bid to zero nickel bid to move vols down. So I kind of agree with your viewer that, I don't really see – there's just not much juice left in those little S&P puts for it to collapse much further. And I think as long as the market believes in the existence of a Fed put, you're going to have your traditional kind of 30 delta hedge buyers still buy those little teeny delta puts in place of those.
Yeah, I think it's kind of interesting. Mark, same question for you. Do you agree with our listener here who thinks that the Barclays research is kind of theoretically interesting but practically not that probable, or maybe take the other side?
I get it. I mean, that vol could come in. I mean, I think that's why I kind of discussed it. But I think the one thing you would really need, and maybe this is the part Barclays missed, is that you would need realized volatility to continue to be what it has been for the last couple of months. I mean, if you consider the traditional spread between the VIX cash and realized volatility in a low vol environment is what? I mean, Mike, what do you think? 4 points, 5 points, 6 points, maybe?
Yeah.
All right. So if we went through a period for several weeks where realized vol was 2%, or 3%, or call it below 4%, that is where you could see the market kind of really punish VIX and vol and the cash index maybe drop below 9. But that's really the scenario. You need realized volatility to stop. It's not just put wing. It's actual movement. So as long as we get a few of these little Nasdaq moves and things like that, you're not going to see vol get a lot lower, and I think maybe that's the big component that was missing from their discussion. It really is about movement.
Yeah, interesting stuff. A lot of things have to come into place to make that happen, but sometimes that's what research is about, exploring the theoretically maybe not that probable, but still somewhat interesting. And this guy, this Bears advocate, keeps sending in. He's got charts now. I guess he was serious. He thought those VIX 21 calls were a good buy. He's sending me charts of VIX and how high it could spike. So maybe he traded those. Who knows? But at least one person here in the audience liking that trade. Meanwhile, we got to keep on rolling to our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. Like the man said, this is the portion of the show where we attempt to peer into the future. And we did so last week. As you remember, this is right around the time of the show last week where everything started breaking down in the marketplace and the Nasdaq, as well as on our systems here. Everything started going crazy over here. So I had to actually write down our crystal ball picks in a different system. And for whatever reason, they did not get imported over into the show notes this week. So I'm going to claim that one on me. I'll take a mea culpa on that one. So I don't have what we predicted from last week. So I'm just going to clear it a tie. Everybody wins because I don't think anyone was really in the 1078 or so range where we are right now. That said, we do have a guest, Mike. So we'll flip the script, clean the slate off, and we'll give you pride of place, Mike. You know the portion of the show. This is where we attempt to guess where VIX Cash will be this time exactly next week. End of show next week. So what are you feeling this time next week, sir?
So I'm talking my book, but I think there's some historical seasonal weakness the week after expiration in June. So I am going to go with a 1225 spot VIX for next week.
Wow, interesting. A little bit. Do you think in this little sell-off we're seeing is going to exacerbate and pump a little juice into the old market, eh?
Yeah, I think there's going to be, you have OPEX today. I think there's going to be some, kind of rolling of hedges, and I think seasonals favor some S&P weakness next week.
Interesting. Mr. Meatball, how you going? You feeling that? You feeling downside? What are you feeling?
Oh, I'm going to try and I'm going to bet with my position. So I'm going to say that we're I'm going to say 10.05.
Interesting. Slightly over. A little bit of Price is Right going on there. The ghost of Russell shall chime in for him since he is not here. And we all know Russell is just a degenerate VIX buyer in this segment, so his ghost is going to be just a degenerate premium seller. He's going to go way low. He's going to say VIX is going to set a new all-time low, at least for intraday here. Going to say 9.15. It's going to blow his mind that he guessed that, but that's what happens. When he's not in town, the mice will play when the cat is away. All right, and last up to me here, we got a nice little range, 10.05 in the realistic, 9.05 on the fake downside, and then 12.25 on the upside. Interesting. Mike there throwing me for a bit of a loop there with his crazy. He's taking the Russell. You are doing your Russell impersonation. You're our buyer today on the show. That's Russell's job on the show. I'm not sure if I'm quite as bullish as Mike or quite as bearish as the Meatball. This is kind of where I believe I guessed right around, not that far from here this time last week. And I'm kind of feeling a similar level again this week. So I'm going to come in slightly lower than next week, but not a lot. 10.5 for VIX Cash. So there you go, listeners. That's our strip here for the Crystal Ball. That's also all the time we have for this week on Volatility Views. But before we go, let me go around the horn one last time, check in with my cohorts, my partners in crime here, see what they have cooking that may interest you. Let's start with you, Mike, as our guest. You get pride of place. What is cooking in the land of Typhon? And if listeners, I should say, are interested in learning more about what you guys do, where should they go? What should they do?
You can go to Typhon Capital's website, is typhoncapital.com, and we have all our information on there.
And we gotta figure out what that truck is in the background there that is beeping over you the whole show. But that said, you can also follow them on Twitter. They are on Twitter, newly added on Twitter, at Typhon Capital, not Typhoon, Typhon, Typhon. And you can get some of their nuggets and pearls of wisdom throughout the week when they're not on the show as well. And last but not least, Mr. Meatball, what's cooking in your neck of the woods, sir?
We're going to do our Option Pit webinar of the month on Tuesday, and guess what? It's on VIX. If you go to our blog, optionpit.com/blog, you can register there. It's on the top of my Option Pit idea of the week, which was long Costco. So there you have it.
There you have it. Check him out, listeners. And, of course, check us out again in about a half an hour or so when we come back for TWIFO. If you like this volatility talk, you like this skew talk, you want to hear it not just in S&Ps, but maybe in crude or in gold, or pick your commodity poison, then we got you covered. In the meantime, what we'll do is we'll run a little bit of some options news rundown for you. So if you're in the live chat room, you can enjoy that. And we'll be back in almost exactly 30 minutes for TWIFO. And on behalf of Mark and the ghost of Russell and Mike and the Typhon boys, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing, and of course for joining us live. We love you guys too. And we'll see you next week for more Volatility Views, and in half an hour for more TWIFO.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.